Hello and welcome to another accounting tutorial. Within this video, we'll be covering the topic of disposals and more specifically, how to account for the disposal of a non-current asset in our accounts. But firstly, if you could hit the like button, subscribe to the channel and click the bell icon, it would be hugely appreciated. I'll be bringing regular content to the channel to try and help you further your accounting knowledge and hopefully help with that exam preparation. So the aim of this session is to develop your understanding of the treatment for disposals in our accounts. So by the end of this video, you should be able to record the double entry in the accounts when disposing of a non-current asset. Firstly, what do we mean by disposal? Well, at the end of a non-current asset's life, a business will need to dispose of it. This could include either selling the asset, part exchanging for a newer model, or simply discarding or recycling the asset. There are three parts to be brought together when disposing of an asset: the original cost of the asset, the accumulated depreciation, and the disposal proceeds. Now, the first thing to do will be to identify the asset in the non-current asset register and either remove it from the records or, better practice, being to mark it as disposed of. I've covered this specifically in a separate video, which I'll put a link to in the description below. In our accounts, we will transfer the original cost, the accumulated depreciation, and disposal proceeds to the disposals account. Let's take a look at the journal entries needed to do this. When approaching any disposal, I would always follow the same process. It's not an absolute must, but by following it as a step-by-step approach, you just make sure that you've not missed anything. So firstly, remove the cost of the original asset from our accounts by debiting the disposals account and crediting the non-current asset account. Secondly, remove the accumulated depreciation relating to the asset we're disposing of by debiting the accumulated depreciation and crediting the disposals account. And third, record the amount you receive for the asset, aka the disposal proceeds, within the bank by debiting the bank account and crediting the disposals account. The final step is to record the profit or loss on the disposal. If you sold the asset for more than what it was worth in your accounts, you would have made a gain on the sale. If, however, you received less for the asset than what it was worth in your accounts, then you'd have made a loss. To record a gain, the journal posting would be to debit the disposals account and credit the P&L as income to the business. If we made a loss on the disposal, we would debit the P&L as an expense and credit the disposal account. So once the journals have been posted, let's have a look at what this would look like in our T accounts. Again, following the step-by-step approach so we can easily keep track of what's actually happening. Step 1. We clear out the original cost of the asset by crediting the asset at cost account. Remember, this would have been a debit balance on this account, so by crediting it, we're reducing the balance by what the asset cost the business to buy when it was originally purchased. We then debit this same amount to the disposals account. Step 2 is to clear out any accumulated depreciation relating to the disposed asset. Just a quick note on the graphics up on screen, I will actually leave the entries in on the disposal account so that we can see how it builds as we go along. I've colour-coded the entries at each stage to hopefully make it easier to follow. Back to step 2. Remember, the accumulated depreciation account will always have a credit balance. We therefore need to debit the account for the total amount of depreciation that has been recorded against the asset you're disposing of. This then reduces the balance on your accumulated depreciation account. We then credit the disposals account with the same value. Step 3 is to record the disposals proceeds. This is how much we receive for the asset. To do this, we debit the bank, therefore increasing the balance, and credit the disposals account. At this point, we've successfully removed all entries relating to the disposed asset, and the final step is to record the profit or loss. Step 4. We'll cover profit first and then move on to a loss. So you'll make a profit selling the asset if the money received is higher than the net book value in our accounts. The profit or loss entry will always be your balancing figure in your disposals account. So if you're at the stage and the credit side is higher on your disposals account, then you've made a profit. If the debit side on the disposals is higher, then you've made a loss. This will become clearer when we work through the case study next, but for now, just the double entry. So if we've made a profit, we will record this by debiting the disposals account and crediting the P&L. However, if we made a loss, we will record this by debiting the P&L and crediting the disposals. Once you've made this entry, there should be no balance left on the disposals account. If you need to pause the video to take any notes on these accounts, please do that now, and then we'll move on to a case study to see how this would work in practice. Fantastic. Right, let's have a look at our case study. Hawkins Limited purchased a vehicle on the 1st of October 2017 for £18,000. They have owned the car for 3 years and the accumulated depreciation recorded for the asset is £11,000. In 2020, the business decided to sell the asset and received a total of £9,000 paid by bank transfer. Show the entries to dispose of the asset in our accounts. The approach to this will be to follow the step-by-step process we've just been through in the previous slides. Step 1. Remove the original cost. The original cost of the vehicle in this case study was £18,000. We therefore credit the vehicle at cost with £18,000 and debit the disposals by £18,000. Step 2. Remove the accumulated depreciation. Now, in this case study, that happens to be £11,000. To remove this, we would debit the accumulated depreciation for £11,000 and credit the disposals for £11,000. Step 3, record the disposal proceeds. So this is how much we actually receive for the asset. In this case, this was £9,000. And to record this, we debit the bank for £9,000 and credit the disposals for £9,000. The final step, Step 4, is to record the profit or loss on the asset. Remember, this is always the balancing figure in our disposals account. But first, let's just calculate how much the asset was worth in our accounts. We purchased the asset for £18,000. The accumulated depreciation recorded for the asset was £11,000. Therefore, costs less accumulated depreciation would mean that the asset was worth £7,000 in our accounts. We received £9,000 for the asset and we therefore made £2,000 profit on the sale. As I mentioned above, this will also be the balancing figure on the account. Therefore, to record this, we would debit the disposals account for £2,000 and credit the profit or loss for £2,000. That covers off the case study above. However, the alternative that we do need to cover is where we actually part exchange an old asset, which will then go towards the cost of the new asset. That video I'll link in the description. So that wraps up the video. I really hope you found the information here useful. And again, if you could hit that like button and subscribe to the channel, I would be very grateful. Thank you very much for watching. I'll see you in the next video.